Good morning. Welcome to the BF Anderson Technical Report for September 26th. You know, the most important thing right now to me with the market is that it's become very difficult to find individual stocks that are performing well. This is a buyer's market. We should be buying in here because the indexes are all very positive and the economy looks really good. But we're going through something what we call rotation. It's a changing of the guard. And so it becomes kind of a hunt and peck process where you're looking for the next leadership in the market. My advice right now would be any buying should be light. You should be buying probably about half of what you normally would buy. What we're doing is exactly that. And then if the stock works, then we add to it. Let's get right into the indexes here. Here's the NASDAQ. As you can see that the NASDAQ really started a correction around May, and we bottomed in June, rallied back up again, then we pulled back. But the index has had trouble getting up and making new highs. Now we're basically in this range right here. We broke down a little bit this week. However, we did hold the lower moving average, and the lower moving average is continuing to move up. Now the good news here on the weekly indicator, you have your 35-week moving average continuing to stay in a very strong uptrend. We are holding that moving average and are not breaking below it. That's very positive. Advanced decline line it did kind of somewhat flatten out, but continues to be in an uptrend. Advancers to decliners looks positive. The high-low index, well, we're measuring the number of new highs versus new lows. A little bit of a pullback, nothing serious. New lows on the New York Stock Exchange, we only had 14 new lows yesterday. This is really a good indicator to keep an eye on, and it's stabilizing. We are below 40 new lows a day for really the whole month of September. Now, on the long-term indicator, and we're going to talk a little bit about this. This indicator basically takes a 10-month moving average and compares it to a 20-month moving average. It has been a very good way to see bear markets. You get what you call a death cross. This is where you get these crosses in the moving averages, tells you that the trend is definitely reversing. So you can see bear market here. You had the bear market in '08. And then we had somewhat of a bear market going into the election, the years of 14 and 15. However, right now the index continues to stay on a buy signal. We have no death cross, so the long-term indicator looks good. Now we're going to take more of a look at that on some other indexes. On the sentiment index, we're somewhat neutral now. We got into extreme fear back in August. We have somewhat stabilized. Now, here's another index. This is the S&P 500, and what we're looking at is a 200-week moving average. You notice that, we get down close to the moving average, then we rally, make new highs. We get close to the moving average, rally, make new highs. So we're continuing to see that pattern, which is very positive. Now, on the global side, on the global market, we continue to just see a sideways situation. This is not breaking out to the upside. Internationally, things are slow. And this is one thing that's really kind of holding the market back. Now, what I did is I went ahead and took the 10-20 indicator, the 10-month versus 20-month index, and I used the S&P 600 small cap index. Now, you can see here that small caps are in a death cross right now, which means bear market. On a technical basis, when we get the death cross, we call that a bear market in the small cap stocks. So until the small caps get going, I really think this market's going to continue to have problems. But the good news is that we are starting to see an uptrend developing in this index. However, we're just still on a death cross. We should watch this closely. You can see here back in the past where we've had bullish crossovers, we've had negative crossovers, what we call death cross. This is a golden cross, and then we had a golden cross, now we have a death cross. Now I did the same thing on the value line geometric index, which is another broad index that is not market cap weighted. So the average stock right now is according to the technical terms, this is a bear market in the broad market. So how's the economy doing? Well, one indicator that the Federal Reserve publishes is called the Industrial Production Index. Now, this particular index measures all production of manufacturing, mining, and utilities. And you can clearly see here that when you get a downturn in industrial production, you can see here down here at the bottom is the S&P 500. Generally speaking, you go into a bear market. Now, here we had the '08 downturn. You can clearly see that we went into a bear market in not only industrial production, but the stock market. Here we had another downturn back in 2015. Again, that was somewhat of a bear market. Now, here we are today. You can see we're industrial production. Now, you can see the frustration of the Federal Reserve. They produced this particular number, and you can see here that we're starting to see an upturn. Whether this lasts, now this is published monthly. The last time it was published was on August the 1st. So on next month we'll get September, but it has turned up. So this is manufacturing. And we saw this downtick that came along at the end of last year into the first quarter of this year, and the market did go through somewhat of a bear market in this period here. But industrial production has turned up, so the economy looks quite good. Now, as we get into the top five, I just want to mention here, it's like whack-a-mole. You really don't know which groups are going to lead this market, so it becomes a hunt and peck process. This is the hardest part of investing in the stock market, is identifying the leadership of the market. Now, technology was leading in the first half of the year, but that's no longer the case. The software stocks have all pretty much tanked, not really doing well at all, but we're seeing a definite move here into semiconductor manufacturing. This is KLA Corp. They are involved in making equipment that makes semiconductors, and you can see here that the pattern is very positive. In fact, the stock broke out and hit a new high yesterday. Here's another company, same industry, Lam Research. They make equipment that manufactures semiconductors. Again, it broke out to a new high yesterday as well. We're also seeing activity in anything to do with construction, mainly home construction, and mainly I would believe that because of these low interest rates on mortgages, you're seeing a pickup there. This is Martin Marietta Materials. They mainly handle aggregates. You got a major gap up on earnings here, an ascending flag formation, and the stock is very close to making an all-time new high. Now, this is one stock that is popping up on our list called Snap. This is social networking. Stock looks okay. I'm not really particularly crazy about the pattern. However, you are seeing somewhat of a cup formation here where you're starting to turn up on it. So you should keep an eye on Snap. Now, this company here, in fact, they just got upgraded this morning by a top analyst, Target. This is a retail name. We all know who Target is. Basically, real good earnings came out. Same-store sales came out. Gap up. And you can see somewhat of a flag formation here, but it's not really that positive. We'll have to see what happens today. So what the most important thing to understand right now is that the market is going through a change, and it's going to take time for this to unfold. So take your time, move slowly here, don't be in a big rush. We're buying half positions, we're not buying full positions, but if the stock works, you could add to it later. If you have any questions, please give me a call.